Guys, come on. Come on. You tell me this is a coincidence. Short interest is up 2.72%. We had a freaking 10% gainer day, and we brought Lamp back literally today. You want to tell me Lamp didn't do that? You can't light tap. You can't tell me Lamp didn't make that happen, baby. Let's go. Ooh, baby. What is up, everybody? We're in the Trey's Trades. We freaking talk fast and don't skip class, baby. I like to preface by saying that I'm not a financial advisor or expert, so take it with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, we're going to go over ticker symbol AMC, give you the update. I want to go over Ortex. I want to go over the short volume percentage ratio. I want to go over the stock out tracker, show you the call options, in the money, out the money, the total available shares to borrow, and finish it off with the overall technical analysis, which, by the way, is a filthy, disgusting, nasty sort of setup. So I'm very excited to talk about this right now. Let's get into this rockin' video. So we're gonna start off here with Ortex. As you guys can see, short interest went up 2.72% today. You have a net difference, 2.35 million total shares borrowed into the market. Now, there's a really interesting thing that I just watched pop up here from Ortex, and I actually retweeted this. I think I retweeted this. Might have. Here it is. Yeah. So the average age of short positions in AMC is currently 46 days, indicating that the average price that short positions were entered is at about $10. Now, I actually talked about that on CNBC here today with on Fast Money with Melissa Lee and Matt Coors. Shout out to Matt Coors. Shout out to Melissa Lee. Absolute awesome. It was a good experience, and I hope that it passed along some valuable information. But nonetheless, that's a beautiful thing to see because it means that the average losses for a short position right now trading at $60 is 500%. That's stupid. You want to talk about dumb money? What kind of scenario? Like, I look at a negative freaking 20% position. I'm like, God, I really messed that up. I got to take my loss. But these guys are down 500%. Think about how ridiculous that is. That goes against all basic fundamental trading. It just does. It makes no sense. So that's absolutely stupid. Utilization is also going back up here, which is a pretty fascinating thing to see. It's up 10% in the last 7 days, up to 87%. Now, as the utilization goes back up, you're going to see the cost to borrow go back up. Why is this? Cost to borrow annualized interest rate for any sort of short position or shares on loan, sitting at 19% maximum cost, which is actually rivaling the height of where it was about a week ago, which is a good thing to see. This happens because of basic supply and demand, right? Less supply equals higher demand. Less overall shares to borrow means higher overall interest rates or cost to borrow. So seeing that utilization goes up gives you two confirmations. One, there's going to be more pressure on short positions because it's going to be, the cost to borrow is going to go up. And two, it's going to be harder to borrow stock. They're not going to have as much ammunition. There's going to be more of a ceiling on the overall squeeze. So it's a beautiful thing to see. Short interest at 13.36% of free float. The free float is what is available to the retail trader after institutions, insiders have taken their cut. 68 million total shares, short interest. This is an overall trend. 85% of the exchange data is reported to Ortex, right? So it gives you an idea, and this is reported data, right? We don't know if there's any sort of malreporting. In fact, Ortex has had to correct themselves a couple of times just based on, this is actually a shares on loan, not a short position, and they get new data that says otherwise. So take what you see with a grain of salt. It's a trend. It's not the overall picture, but the trend is that the short interest is going back up. Now check this out. This is something I'm very excited to talk about, and it's the overall freaking short volume percentage. 43% on June 16th. So stupid amount of shorting that's still taking place, even though AMC has been lights out for literally the last 2-3 weeks now. Doesn't make sense. Never gonna make sense. Let me tell you something. If it doesn't make sense in your head, you're thinking about it, why would you do this? Because it doesn't make any fucking sense. It makes no sense at all. The short of stock with this sort of volatility and momentum behind it. It's a dumb trade. It just is. Shorting AMC stock right now, while there's still people holding this thing, while it's consolidating in the $55, $60 range, that shows you some stupid gorilla strength. Consolidating at $55, $60 shows you it's not a pump and dump. It shows you people think it's going to go higher. It's as simple as it gets, right? You can read the chart and it tells you the whole picture. If the chart's bullish, right, it runs up to $77 and it retraces, because that's what you watched happen. This was a retracement. It wasn't a pump and dump. It was a retracement. It bounced off that 61.8% retracement, almost picture perfect. That's strength. That's technical. That's trading. There's people holding this freaking stock right now. It shows you the picture. And if I was to see that as a short seller, I'd be thinking to myself, holy piss. I need to get out of this because this is not done. There's more damage to come. And there is. There 100% is. Stock Out Tracker, I'm going to show you the call options and the money. This actually went up here a little bit, 488,000 total call options expiring in the money. I do think there was some hedging that took place today, especially because the call options chain, you had a large amount of call options between $59 and $60, and you still do. 22,000 and about 30,000 total call options between $59 and $60. So I would not be surprised if you saw some hedging, especially because we're closer to that Friday expiration date, right? The closer you are to expiration, the more violent of a gamma squeeze you're going to see from call options running in the money. So that's a beautiful thing to see. Another really interesting piece is how many call options are in the money and out the money for puts compared to calls. Now check this out. 488,000 total calls in the money. Out the money for puts, 785,000. There's a lot of people that are going to lose a lot of money this week. And I've talked about it before. I'll talk about it again. I'll say it again, right? Look at the puts on this. There are people who are playing puts for June 18th that have ridiculous strike prices. 16,000 puts at the 0.5 strike. Meaning people, for them to even break even tomorrow, this would have to get to like 10 cents. The way for them to make money on this is impossible. It's just, you beat down 98% of the day for this to even happen. So this is a really fascinating piece to see. I don't wish ill will on anybody, but hedge funds who are betting against retail investors, there's a freaking vendetta there. That's personal. That's freaking personal to me. So I've got no remorse for short sellers who are betting against the little guy, betting against the U.S. economy. You got what's coming to you, man. Everything in life's earned, good and bad. Everything in life is earned. So with that being said, you've got the overall trend on what's happening in terms of numbers. Let's talk about this technical setup because you've got a beautiful one, right? You've got a beautiful, big, fat, nasty inverse head and shoulders pattern. Now, what is an inverse head and shoulders? To put this really, clear, a head and shoulders, the inverse is the exact opposite of that, right? It's upside down. So if I put this in stay in drawing mode, check this out. This would be a head and shoulders pattern. You've got a peak right here, which forms a shoulder, the head, and then another shoulder, which forms after that. So the exact opposite of that would be an inverse. It's upside down. This is a bullish reversal sort of setup, right? So what you've got here is a shoulder, you've got a head, right? And then you've got a neckline. And that neckline break usually comes with a violent move. And now we're holding over that $60 level and we're starting to consolidate over it, right? That is acting as essentially a level of support. So what are we seeing right now, right? Let's just check this out really quick. I don't want this trend line. Anywho, check this out. 60 bucks, we're holding just above that line. You can act essentially as that $63 level of resistance being the overall megalodon freaking level of resistance that'll get you 10-town big fat nasty break. We rejected off of it a couple times today. Look at this, 1, 2, 3, small actual bull trap setup, and it didn't even sell off that much. It bounced back really nice with this big fat nasty hammer candle and traded over the VWAP for a pretty solid portion of the day outside of a small sell-off almost into the close, right? Down about 0.71% here in the after hours, but I'm not sweating about that. So what do I think is going to happen, right? What's my prediction leading into tomorrow? I am still bullish. I think this week is going to be a great one to set up for this freaking squeeze, especially if these next upcoming call options start running in the money. It can really be lights out. It can be a nasty thing. So this is my hypothesis. This is what I think, right? This is just based on previous trends and the things that I've seen before. You've got kind of an ABCDE pattern set up right here. Now, what does that mean? ABCDE means trend line bounces. So what you have now is an ascending level of support and a horizontal level of resistance, right? An upside support, horizontal resistance. You are essentially rocking a ABCDE setup. A, B, C, D, E. The D is going to be essentially a bounce back down to this ascending level of support. I can't guess it to the penny, I can't guess it to the dollar, but this is my estimate, right? I'm thinking pre-market, you're going to see some sort of drop down to essentially somewhere between $58 and I would guess about $56. I give it a dollar range in both directions to ultimately get a clean break over $63 sometime here in the regular market hours or the pre-market, one of those two, and get that, $65, $70, $75 gamma squeeze push if it's going to happen. This is a bullish setup, right? You've got a lot of great confirmations here. 15 MA hooking away from that 200 EMA, which means the microscopic price action is gapping away from the macroscopic price action. Traded over the VWAP for a great majority of the day. You've got a triple bottom setup with an upside ascending level of support. You've got an inverse head and shoulder pattern with a neckline break setup right now. You've got an astronomical amount of call options that expire in the money, which would give you insane hedging. Everything is leaning in the direction of the apes. This is bullish. This is beautiful. This is literally a sexy setup. When in doubt, zoom out, my friends. This is not a pump and dump, and it never was and never will be. This shows you it. You want to see what's happening with a stock on any given day? Look at the chart. It tells you, right? What this is telling me right now is people are holding it. People are holding it. If it ran up to $77 and it did exactly what happened back here when it ran up to freaking 25, that is not strength, right? This is volatile, stupid ridiculousness, and it didn't last, right? That's not sustainable. This, what we're seeing right now, while you will eventually run into volume exhaustion, essentially, the idea that you run out of liquidity, people can't play as much, so eventually it lowers back down until people have enough money to play, right? That's not an issue yet because people are still buying the stock. The volume is still incredibly high. It's actually found a baseline. I mean, it's consistently trading between 140 million and almost 300 million total volume every day. That's nasty. This is strength. There's absolute stupid ape gorilla strength rocking an AMC stock right now, and I stand by my statement, and I always will until the freaking music changes, that there's more upside here. There just is. There's more money to be made on AMC stock, and I can't wait for that day to come, and that's what I've got for this video. So blah, 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 I know the whole spiel. Drop a like, subscribe, what do you want to do, my friends? Catch you all in the next one. Hope you all were freaking cooking with Cusco today, going to Tennytown, Chicken Church, cracking Kingdom, light taps. Peace.